Good afternoon. Let's do some business here. We are doing it live, doing more at 4 weekday afternoons. We get right down to business with the news-driven hour right after Ben Shapiro. And just before the 790 KBC News Blitz with Randy Wang at 5. Mottek On Money live on the air here at 790 KBC, streaming live online worldwide at kbc.com. And your on-demand Mottek On Money podcast, kbc.com, Apple, iTunes, and all your favorite podcast platforms. Stocks taking a breather today after an impressive rally we've seen. We see the S&P 500 and the NASDAQ snapping a multi-session rally after stocks bounced back from that steep sell-off we saw 3 Mondays ago when the Dow plunged more than 1,000 points. The S&P 500 closing down 11 today, settling at 5,597. The NASDAQ pulling back 60. And the Dow also pulling back today, down by 62 points. The blue chip index, by the way, breaking a 5-session winning streak. The price of gold taking the spotlight today, shining and hitting a new record high at the close. Gold hitting as high as $2,531.60 an ounce, settling at $2,550.60 an ounce. Silver is just below $30 an ounce, up 25% since the start of the year, by the way, for silver. We'll talk silver and gold later this hour, not with Burl Ives, but with Barry Stepler, who will be joining me live later this hour. A longtime owner of Stepler & Company in Woodland Hills, and he's also the former president of the American Numismatic Association, specializing in rare coins. The price of oil also in the spotlight as nervousness continues. The Middle East, we saw oil futures logging a loss today for the third straight trading session. Of course, later this week, we'll be getting some signals from the Federal Reserve, a big speech planned by Fed Chairman Jerome Powell at the Jackson Hole, Wyoming Central Bankers Conference. We'll be getting some new readings on jobs this week as well. The jobless claims numbers will be coming out. Job gains last year and early this year might have been exaggerated. The U.S. created a stunning 2.9 million jobs, or 242,000 a month, from the spring of 2023 to the spring of this year, when the economy was thought to be slowing down. Or did it? Looks like these numbers are getting a second look. Bond market participants bracing for what could be a busy time of trading starting tomorrow morning, pending a sizable downward adjustment in the government's annual payrolls numbers. Latest estimates, according to MarketWatch, suggest that non-farm payrolls from April of 23 to March of this year will be revised down by a total of 600,000, or as many as 1 million jobs, when the revision comes out first thing tomorrow morning. Mortgage rates have come down, fueled by the lowest interest rate since spring. California home sales rebounded in July to reach a 5-month high, according to a new reading out today from the California Association of Realtors. Also, the statewide median price took a breather in July, slipping for the second month in a row, I should say, in July, after setting a record high in May. July's median price dipping 1.6% from $900,720 in June to $886,560 in July. California's median home price was still 6.5% higher than what was recorded in July of last year. Coming up later this hour, I'll talk real estate with Kurt Northrup, real estate agent with Compass in Beverly Hills. Also, new rules for real estate agents have kicked in. We'll talk about that with Kurt Northrup as well. But first, on your money, the markets, the economy, and the whole works now. Joining us live is Jim Hausberg, Managing Director at Hightower Advisors, the Hausberg Group in Beverly Hills. Jim Hausberg, thank you very much for coming to the line this afternoon.
Hey, Frank, it's a pleasure to be with you and to talk to your listeners.
Thank you. Yeah, it's been a while since we chatted behind live microphones. We had a pretty volatile time 3 Mondays ago, a nice bounce back and a bit of a breather today. Sorry, it is a slightly down day today. We've had this impressive rally. Give us your view of the markets here, first of all.
Yeah, well, first of all, Frank, there's the old adage, don't fight the tape, and that's what you shouldn't be doing. This market is very, very strong. Last week's turnaround after the August 5 sell-off due to the carry trade in Japan has been very, very robust. NASDAQ up 5.5, S&P almost 4, the Dow in the 3 range, even emerging markets up 3, and Europe, Asia, and the Far East up 4. These are strong, strong numbers on a global basis. And I think it stems from a few things here on the economic front. First of all, the jobless claims, which we'll see again this week, was lower than expected. That's positive. The inflation numbers were down to the lowest level we've seen in several years now, and that's another positive. And retail sales were much more robust than anticipated. And so we're showing some real good strength. Earnings came in nicely for the S&P in the quarter. And a lot of companies, as you know, beat earnings expectations. So those things are sort of the tailwinds we're having. The headwinds we're having, Frank, if there are any, is this uncertainty. Is the economy slowing and that's why rates are coming down? Or is it because inflation's easing and that's why rates are down? But we'll get a better, take on that when Chairman Powell speaks Friday in Jackson Hole for the annual symposium on the economy. So right now, I'd stay, long the market. But volatility, as we saw from 2 weeks ago, is part of the world we live in today, Frank. It's why you have to remain a long-term investor and buy on weakness when the fundamentals make sense.
Thanks for laying it out so clearly. We're on the air live with Jim Hausberg with the Hausberg Group in Beverly Hills. We saw that volatility index take an epic spike several Mondays ago, and then it's seen a record-shattering drop since then, although today it looks like the VIX index is up 8%. Would you be placing any bets with that VIX index at this point, given all of the geopolitical as well as political uncertainty around the world?
Well, when that VIX got up to 65, which was the highest number we've seen since I think 08, 09, in hindsight, it's a fear index, Frank, is what it is. And fear is a much stronger emotion than greed. That's why markets go down faster than they go up, even in a momentum time period. So that number got way too high. It was a dead, giveaway to buy stocks because things were being thrown out for no reason. And we've had this huge rally since. So I'm not concerned with where the VIX is right now. It makes me feel comfortable. But, we've got the election coming up in 80 days, 78 days, whatever it is. And there's going to be some volatility around that, as there always is. But longer term, again, I think who's ever in office, markets are going to do what they do. There's probably a little concern if the Democrats win because Harris is talking about increasing corporate tax rates to 28 from 21. Who knows what happens there? But, overall, I think things are shaping up pretty good. But the data is going to determine what the Fed does. And right now, expectations are for 6 to 8 rate cuts in the next, 12 to 18 months. The Fed meets 8 times, I think, in the next year. And talk is they're going to lower a quarter each time. We could get to 3.5 from 5.25, 5.5 right now in the Fed funds rate, which I think would be bullish for stocks.
All right, so the Fed chairman will give that speech on Friday, as you noted, and then next month we'll get the Fed meeting, the policy-setting meeting that'll take place, and that's when we'll get the decision on interest rates, a statement on the economy, then a full-blown news conference from Fed Chairman Jerome Powell. Do you think it'll be a 0.25% next month or maybe 0.5%, and will it be one and done this year after next month?
Well, I obviously don't know the answer, but if you're asking me to make a bet, I would say 0.25 point. I think the market might like to see 0.5 point, but that's a bit too much, I think, for the way things are going. But I certainly think 0.25 point is in the cards. And then we'll see what the data brings out. If the economic data continues to show some weakness, if inflation continues to come down, we'll see further rate cuts down the road. And, I just don't think he wants to go out there with a 50 basis point call and then see markets run away on the upside. He's done an amazing job as the Fed chair for a long period of time. Did incredibly well for everybody during the pandemic and bringing rates down, maybe a little behind the curve and moving them up. But, right now we're in a good spot. I've said this every time I'm on with you, Frank, as far as equities and bonds are concerned. If equities can get that long-term 9, 10, 11% return, which is obviously happening this year, we're up 17 in the S&P. Although 2 weeks ago, Frank, we were up 8. So the volatility is certainly here. And bonds, even though rates have come down, we're still in that, 4% to 5% area with treasuries, short-term, a little higher than the longer stuff. And then when you get into quality corporates and even munis for that matter, the rates are still pretty attractive versus where they were several years ago. So I think the mixed, balanced portfolio makes a lot of sense during this time period.
All right, we're on the air live with Jim Hausberg, Managing Director at Hightower Advisors, the Hausberg Group in Beverly Hills. What about the Mag 7 names? NVIDIA has seen an impressive rebound. It was at 130 yesterday, pulling back nearly $3 today to 127 and change. What about NVIDIA and the Mag 7 names?
Well, I'm not a monster fan of the Mag 7. The S&P 500 is made up of 500 stocks. Some people call it the S&P 493 when you back those 7 out. So those 7 have been huge returns for a while now. Apple, Microsoft, Google, NVIDIA is now in there, Tesla, and Meta. I may have missed one, Amazon. Look, those are the growth engines that are driving the economy, but don't kid yourself. The industrial sector is doing better. The financials are trading better. Even the real estate stocks, which have been way down, if rates come in a little bit from here, which I think they will, real estate should do better. You talked about the housing in California, the biggest month they've seen in a while. You talked about mortgage rates. So lower interest rates really help real estate. And I think that's why we're starting to see a rebound in some of those REIT names. The financials, if we're going into a recession that some people think, the financials usually don't trade well because they get hurt when asset values are down, and they're trading very well. In fact, Frank, all the sectors in the S&P, all 11 of them are up nicely, high single digits to pretty impressive double-digit gains. So even though we're always fearful these days, especially with what's going on around the globe, Ukraine and the Middle East, we talked about oil prices coming down. I don't know what's going on with the talks in Israel, but with all the fear factor and seeing oil dropping 3 days in a row, maybe cooler heads will prevail over there after all. But oil has certainly come down, and there seems to be an oversupply out there. And I'll tell you this,
Right,
when you go to the pump these days, you really, I don't want to get into my car, but I paid $4.59 the other day, and I remember not too long ago paying $6. So it's a pretty big drop.
On there live with Jim Hausberg. What about oil here, given nervousness continuing, obviously, between Israel and Iran and the ongoing Israel-Hamas war after Israel was attacked back on October 7th? We see oil right now just below $74 a barrel. Would you be touching any of the oil names here now?
I said it before, I'll say it again. Not a huge fan of the oil stocks. They do pay big dividends, though, but a lot of times they have to borrow to make that payment. Some of the stocks have traded okay, but, they're trading stocks. You got to catch them right, Frank. You want to catch them when oil's moving up, and when oil's heading down like it has been, you probably don't want to really, own them. But, pretty low PE ratios, obviously big CapEx. When you're drilling for oil, you spend a fortune, and then moving it around. It's a big process. It's a very small percentage of the S&P 500, Frank. In the early 80s, oil was 25, maybe 20, 25% of the S&P. It's 4 or 5% today. It's almost irrelevant, which is pretty hard to believe. But the Mag 7, to your point before, it's 30% of the market. So you got to be careful in these index funds, that are so heavily weighted towards, 7 stocks. People like owning the S&P index, but just remember what you're owning. And that's why, a couple of weeks ago when things came down, the S&P came down pretty hard, but hey, it's come right back. So, oil, not so good. Mag 7, like them more over the long term.
All right. On the flip side, the EV names are in focus. It's seen a wild ride this year. Tesla included, down $1.62 today to $221 and change. Tesla has rebounded impressively. Elon Musk is still on the top of the world's wealthy list, by the way, at $247.6 billion. Way at the top with that number, although he lost about $900 million today, by the way, according to Forbes magazine, which tracks all of this daily. So tough day for Elon Musk, losing almost, $1 billion there.
Yeah, well, Bezos lost like $20 billion last time Amazon reported, if I recall properly.
Yeah,
those
today I'm looking at it right now. Bezos is up $612 million today and is worth $197.3 billion. So Jeff Bezos had a bit of a better day than Elon Musk did.
Yeah, I'm sure. Those numbers are just in another, stratosphere. But those companies and the valuations are fair when you look at the growth rates. Now, in the EV space, Tesla's the winner, period. Rivian has struggled. Lucid has struggled. Some of the foreign ones have struggled. He's got the right formula, and he's going to be coming out. I don't know when. I know things get delayed with the $25,000 to $30,000 car, which could sell very, very well. He's just got to, whatever his public relations people say he should do or shouldn't do, it seems irrelevant. Tesla sales are strong. They're making money, and they're selling it on a global basis. You see those cars all over Europe now, which is pretty hard to believe. So he's got a great formula. They're going to have the driverless car at some point, and he'll be a winner there. And when you get the battery strength, Frank, up to where you can drive 400 or 500 miles, which is probably coming, that's going to even be a bigger hit. The other ones are pretty speculative. Rivian, maybe, if you want to look at the EV that has a nice truck. but the U.S. manufacturers are losing money in EVs, so I'd stay away from those.
All right. What about gold? Good old analog gold, the real gold, or digital gold cryptos. Any thoughts on those with gold at a record high here today?
Well, the only thing I would say about both those is if you look at the technical trading in stocks and you don't look at the fundamentals, both of them are buys on weakness. I can't figure out Bitcoin. I never will be able to. But the fact is it's traded very well. And if you buy the Bitcoin on these big pullbacks, again, extremely volatile, maybe a small percentage of the portfolio. But when you don't understand it, how can you invest in it? Warren Buffett's whole thing is, he invests in companies that he understands. And he's the first one to say he has no idea about Bitcoin. So he'd stay away from that. Gold, God, it's moved up a ton, 20 some odd percent. Silver's done pretty well also over the last 12 months. So I think on weakness, if you want to put that in a portfolio as a safe haven, I don't know. It used to be a whole thing about you own gold when you're worried about inflation. Maybe weakness in the dollar is another reason. But it's certainly getting a bid out there on any weakness.
All right. Since you mentioned Warren Buffett, he famously unloaded a lot of Apple stock recently, which has also seen an impressive rebound here. It took him a while to come around on tech names, including Apple, and he's sitting on a pile of cash now. What about Apple here?
Apple is an incredible company. The best global brand we know of. Anytime you go by an Apple store, there are people in there. There are people waiting in line to get in. Who knows what the next product's going to be? Who knows how their AI, business plays out? But I got the watch, I got the phone, I got the AirPods, I'm on the iPad. I'm not the only one. So the revenue has been incredible there. The free cash flow has been incredible. They've invested in businesses for the future. We'll see where they go, but incredibly well-run company. Tim Cook is a superstar, and you have to own that stock if you're in the market. Paying it up here at 126 might be a little high, but I'd still hold that and certainly buy that on weakness.
I wish it was 226 now.
226. I'm sorry, I gave you a bad number.
That's
I only
right.
missed by 100, Frank.
Jim, you're right on target as always. Thank you very much for joining us live here. We always appreciate it and look forward to talking to you again very, very soon.
Pleasure to be with you, Frank. Wishing you all the best.
Likewise to you and yours there. That's Jim Hausberg, Managing Director at Hightower Advisors. All the best to your team at the Hausberg Group in Beverly Hills. Let's get right out to the freeways now on 790 KABC. 790 KBC welcomes. Want to take a guest? Yep, John Fogerty coming to the Pacific Amphitheater on September 3rd. Tickets are on sale now. Right now, caller 9 wins at 1-888-795-2222. You can get a pair of tickets to the show if you're caller number 9. Call right now, 1-888-795-2222. Tickets furnished by the Pacific Amphitheater. Stocks pulling back today. The Dow down 61, snapping a pretty impressive winning streak we've seen over the past week or so. We're back to 40,835. The S&P 500 down 11 at 5,597. And the NASDAQ down 60 at 17,817. The yield in the 10-year note at 3.81%. That's the one that impacts the fixed-rate mortgage rates, which have been moving lower lately. Taking a look at Bitcoin right now, down about 200 at 59,312. Ethereum down 2 at 2,587, and Doge at the moment at 10 cents. Among the movers today, we see Palo Alto Networks moving up nearly $25 at 368 and change on its strong earnings report today. Valero shares down nearly 7 at 141.26. NVIDIA, the Magnificent One, down 275 at 127.25 after closing at 130 yesterday. Checking the price of oil, it's pulled back 55 cents at the moment, 73.82 a barrel. Gold in the spotlight, hitting record highs today. Right now in after-hours trading, up about $2 at $2,552.30 an ounce. The VIX index, the so-called Wall Street Fear Index, the volatility index, moving up today by 8%. And now the latest news for you here on 790 KABC. Mottek On Money continues here. Good afternoon. Turning to real estate now. New rules for real estate agents have kicked in under a big agreement, a big settlement with the National Association of Realtors. Home sellers are now only responsible for paying their agent's commission, typically around 2.5%. The buyer and the buyer's agent will separately agree on a commission, which will no longer be taken from the sale price. In the meantime, mortgage rates have come down, fueled by the lowest interest rates since spring. California home sales have rebounded in the month of July to reach a 5-month high, according to a new report out today from the California Association of Realtors. Looks like statewide prices have taken a bit of a breather here in California, slipping in July for the second month in a row after setting a record high statewide for the month of May. July's median price dipped 1.6%. From $900,720 in June to $886,560 in July. Let's bring in Kurt Northrup now, real estate agent with Compass in Beverly Hills. Kurt Northrup, thank you very much for taking the call this afternoon.
Thank you for having me on, Frank. Always a pleasure.
Wonderful to have you with us here, and you've been doing this for a while, Kurt. First of all, your reaction to the new rules for real estate agents and what impact are you seeing out there?
Well, I mean, it doesn't really change the amount of money that's changing hands. What's changed is the complexity in which we have to organize our relationship with our clients. So when we're selling a property, they've decoupled the buyer's commission from the listing agreement. However, I would say that the majority, if not all, agents are recommending to their sellers to leave in either a concession or a clause that provides for that commission. The reason we do that is because it's much harder for a buyer to come up with that extra 2.5% than it is for the seller. And even if you ask the buyer to come up with it, it's baked into the negotiation for the price of the house anyway. So it really, net just means a little bit more paperwork for us. And honestly, the people, the person who kind of gets the short end is the buyer, because they're now trying to navigate something most don't really understand why they're doing what they're doing, and they don't understand, why or how the rules have changed.
We're on the air live with Kurt Northrup, veteran real estate agent in Beverly Hills. And maybe you can explain it for us then, Kurt, turning to you now to figure all of this out here. If somebody wants to sell a house, for example, I come to you here, Kurt, and I want to sell my place. What do I need to know about all this new stuff going on?
Well, I mean, the spirit of the settlement was to say to sellers, hey, you only have to pay for your listing agent's commission, which to a bunch of lawyers and suits in a room sounds like a great idea. But from a practical basis, it means that you've got a property that you're going to try and market and trying to make it as desirable for as many people to come in there and pay you as much money as possible. So if you're sending a message to them, oh, you know what, I'm not going to take care of your agent's commission, that cools that enthusiasm to a certain degree. So what I'm telling my clients is, don't change your strategy. Stick with a 5% commission to pay, both sides commission, because it just interferes with the momentum in an already frozen market. You don't want to give buyers or agents a reason to, deprioritize your property for sale.
What is the situation out there? Okay, so let me flip it over to if somebody comes to you, I want to buy a place in Beverly Hills right now. What's the guidance under these new rules?
So we're not allowed to tour a property as a buyer's agent with a client unless we have a buyer's commission agreement in place. Also, if there is an open house and you as a buyer want to walk into that house, you have to formally establish your relationship with that agent who's going to show you the property if your agent is not present. And to boil that all down, it just makes it, especially for new buyers or unsophisticated buyers, they don't understand why they need to do that. But at the end of the day, what we're doing is we're making those commission agreements with our clients. Commission has always been negotiable. It will continue to be negotiable. If we sign a commission agreement with our buyers and we walk into a house and, that seller doesn't want to pay for commission and my client can't afford it, we may have to go to another property or we may have to renegotiate our commission. That's what it's doing, is disrupting the buyer's, flow into the marketplace and ability to access property. There's another aspect to this at a higher level of why this is happening, why the Department of Justice decided to do this, and it's really it doesn't really help buyers. It hurts buyers, and to a certain extent, it's not really helping sellers that much either, because we're still getting back to the same place, but it's just a more complicated path.
Thank you for that excellent explanation. So that as far as open houses, there was a time, I guess just until recently, right, where some places they just there was especially condos and all that, they would just go on up there and take a look at it yourself and then come down and that's how it was handled. But now it's more. So how much of a hassle is it to attend an open house nowadays?
Well, when you walk into an open house, there's going to be, or there should be, a sign-in sheet provided by the California Association of Realtors that defines your relationship with that agent who's showing the open house. You have a choice. You can either say to the agent, I already have representation and I'm signing this saying that you are not my buyer's agent. You can do that, or you can say to that person, hey, I want you to be my buyer's agent, and therefore they are now representing both the seller and the buyer. But either way, you have to decide how do you want to relate to this agent showing you the property or the agent that you would like to have represent you. So it's just another level of difficulty. It doesn't mean that you can't tour a house. What the concern is maybe some, less discriminating agents may try and intimidate buyers to be signing buyer-broker agreements with them in order to tour the property, which is actually in violation, but it doesn't prevent agents from doing just that, because there's an opportunity there to do that. Although I would honestly, I would never do that, and I hope that no one's going to do that. But that would be the concern, is that agents are going to try and trick people into signing buyer agreements with them just to be able to see a property, and some unsophisticated buyers may not understand what they're doing.
Wow, that's pretty important. And so when you sign in to see an open house, when you're signing that, are you obligating yourself to that agent for other properties beside the one that's involved in the open house?
There's a form that, and there's a lot of forms now, but there's a form for that, so you can sign it just with that one property as a buyer's agent or multiple properties. And this is where it gets confusing, because the reason that agents exist is because buying a property is probably the single most sophisticated and expensive transaction they're going to have in their life. And we're here to help them not just with the legal and the paperwork, but with the property and the value and all those things. And in order to walk into it with, the confidence that you're doing the right things, you really do need to find an agent that you trust and that's experienced to be able to help you navigate that. And a lot of times the buyers are coming into the market through electronic, searches through Zillow or Redfin or whatnot, and they don't have an agent yet. And that's really who's behind this movement, is those companies are trying to disrupt our business to send more business through the electronic means and to take more of the market share away from the physical agents.
At the moment, give us a quick update on how sales activity and prices are looking from your vantage point.
Well, it's very different in different marketplaces. There's some marketplaces that are oversupplied. There's a lot of marketplaces that are undersupplied. But in general, I would say transactions are down anywhere from 25 to 50% across the board. I use a very non-scientific method. My transaction coordinator, who's been doing this for decades, works with a dozen different agents. And when she's got low volume, I know the entire industry has low volume. And she's complaining of that a lot of escrows are getting canceled. There's a lot of buyers that are just not confident that they're doing the right thing. Sellers are still handcuffed into these 2.5% mortgages. So the inventory's low pretty much across the board. So it's just like I said before, it's a frozen market, so there's just not a lot of activity. There's still things to buy and there's still deals to be had, and that frozenness is keeping the prices pretty stable. But it would be nice to see interest rates come down and us to, get back to business, because it's not what it was, 3 or 4 years ago for sure.
Kurt, thank you very much for fielding all these important questions here. You've really informed the audience very, very well, and appreciate it very much. That is Kurt Northrup, who's a real estate agent with Compass in Beverly Hills. Kurt, thank you very much for taking the call here this afternoon.
Thank you, Frank. Always appreciate it.
Thank you very much, and let's get right out to the freeways now here on 790 KBC.
Goldfinger.
Mottek On Money continues here in 790 KBC. The price of gold shining today, hitting an all-time high. Gold has hit as high as $2,531.60 an ounce, settling at $2,550.60 an ounce. Silver is just below 30 cents an ounce. Joining us live now from the San Fernando Valley, Barry Stepler, founder and president of Mint State Gold and Stepler and Company, former president of the American Numismatic Association, rare coin specialist. Barry Stepler, thank you very much for joining us on this banner day for the price of gold at an all-time high.
Yeah, it's good timing, Frank. I love when you call me when gold hits an all-time high. Your timing is great. As a service to two of your listeners who have asked me to make this clear, when you see gold, the price of gold on any of the television stations, they're normally not quoting the spot price of gold. They're quoting an outside contract like December, which actually actively trades on the exchange. For example, today, the December contract closed, like you mentioned earlier, at around $2,554. But the spot price, which is the price of what you can buy and sell it right now, is about $40 less. So gold did make an all-time high, but the actual number was $2,515. So that difference between the spot price and the contract price is basically, it's called contango, and it's the difference between buying it now and buying it in December, which carries interest charges, insurance charges, storage charges. So when you see it on the news, normally that's an outside contract. So I shared this information because two of your listeners asked me to. So this is a public service announcement. However, in regard to gold, yes, we are seeing a substantial amount of buying right now in gold, and we are very busy here, which is nice to hear that I'm a very popular guy right now. We have
absolutely. Well, we take good care of our listeners, and I know you do too. That is excellent. And we're on the air live with Barry Stepler as gold has hit a record high today, and silver also just below $30 an ounce, well off its all-time high. Now, Barry, you've been bullish on gold, of course. Where do you see the price of gold go from here?
Well, when the year started and gold was right around 2,000, I said I think we'll hit 2,500 at least by year end. Well, it's over 2,500 and it's only August, so I'm having to reassess my valuation. I think we're going to see 2,800 by year end. Other people are predicting 3,000 by year end, but there's nothing between where we are right now and 2,600. We'll probably see some resistance over 2,600, but what right now is you're seeing so many factors are out there right now that are driving the gold price. You've got the interest rate cut, which there's going to see the first one probably in September and possibly two more, and that obviously makes gold more desirable in dollars. Plus, it lowers the value of our dollar, which also helps the price of gold in terms of dollars. Then you've obviously got the geopolitical issues with the wars in Israel and Russia and Ukraine, and that's causing a lot of buying. Central banks are buying a substantial amount of gold right now. China, which stopped buying gold in, I believe, May and June, has now stepped up and starting to buy gold again. So the consumption side is incredible. The demand has never been stronger. And what we're seeing right now is a lot of first-time buyers, and I've seen that over the last week or two, particularly since gold reached 2,500 on Friday. We're seeing a lot of people right now coming into the market that have never been in the market before because they hear gold's moving set higher, setting all-time highs, and there's really nothing between it right now and probably 3,000, but I want to be conservative and say I think I'm looking for 2,800 by year end. Silver is the undervalued one. Right now, with gold at this level, silver should at least be $35, and right now it's trading right around $29 and change, and that's just a bargain right now. So a lot of people that don't want to step up to buying gold at all-time highs can buy silver at roughly 60% of its all-time high, so it's still a good value. But we put a lot of this information on our website, Mint State Gold, and every Monday I put out a new weekly market report, and if you can read Monday's weekly market report, which was yesterday, it talks about what happened last week that drove the price past 2,500, all the factors, and how it did it as the market moved from Asia to the Middle East to London to New York. So I try to give our listeners and our clients a lot of information on why this market is moving up and what's driving it.
You do a great job, Barry, and that's why you're on the air live with us here. That is Barry Stepler, founder and president of Mint State Gold by Stepler and Company. And curiously, gold is moving up just at a time where we're told inflation is supposedly easing. Gold, of course, a traditional inflation hedge. Is that something people are concerned about when they come in to see you? I'm worried about inflation.
It used to be considered an inflation hedge. Right now we're seeing it more of a currency hedge. Silver is the ultimate inflation hedge, and that's why we're seeing the reluctance for silver to go up, because silver right now is obviously, like I said, is undervalued. As inflation comes down, that has had a negative effect on silver, but it doesn't have an effect on gold because the buyers for gold are obviously central banks, investors, banking institutions, and obviously the public, and they're more concerned about the value of their currency.
Right. Barry, thank you very much for that excellent analysis and information as always. Barry Stepler, founder and president of Mint State Gold by Stepler and Company in Woodland Hills. Barry, thank you very much for joining us live here on Mottek On Money on 790 KABC. Stay tuned now for the 790 KABC News Blitz with Randy Wang, and I'll be back with more at 4 tomorrow afternoon here on Mottek On Money, 790 KABC.
Former Navy SEAL Sean Ryan shares real stories from real people from all walks of life on The Sean Ryan Show.
Tucker Carlson, what is it that you think that people gravitate
I'm not
towards?
self-aware. I refuse to be self-aware. I don't even look in mirrors at all, which you can probably tell from my appearance. I don't have a crazy high IQ, or I really don't have that many skills. I would say my main skill is I believe my instincts. I don't hesitate to follow my instincts, ever. To the extent that I have, I've gotten in trouble.
The Sean Ryan Show on YouTube or wherever you listen.